I'm going to be doing corrections to the asset disposals account. This is the second last example, actually classwork. I'm going to give you the last classwork on asset disposals either later today or on Monday morning. I haven't decided yet because I still have to do an example on that. And then we'll be done with asset disposals. From next week, we're going to be doing shares and buyback of shares, selling shares, and so on and so forth. For today, guys, let's just go through this example here. First of all, it gave us an extract from the pre-adjustment trial balance for the year ended 28th February 2020. Vehicle cost, please note that these are balances at the end of the financial year. Vehicle cost is 1,600, so we assume that that is the cost price at the end of the financial year, unless adjustments tell us otherwise. And then we've got accumulated depreciation on vehicles, which is 2,875,000. That is normally at the beginning of the financial year. Basically, guys, I'm just repeating everything that I've been saying in the previous 4 examples. Okay, I've been saying this in the previous 4 examples. We've got equipment, which is 960. We assume that that is a balance at the end of the financial year, unless the adjustments state otherwise. Accumulated depreciation on equipment is 900,000 rand. That will be the balance at the beginning of the financial year. Please tell me, why do we say it is the balance at the beginning of the financial year? That is because depreciation will only be calculated at the end of the financial year. This year's depreciation will only be calculated at the end of the financial year. So there's no way that this year's depreciation has been included in that accumulated depreciation. Remember, accumulated depreciation is the sum of the depreciations of the assets from when it was bought up to date or up to the day it was sold. Okay, earlier of the two. Under additional information, it says truck purchased on the 1st of May 2017. Highlight the 1st of May 2017. It was purchased on the 1st of May 2017. Now, draw the 2018 financial year. You'll realize that the 2018 financial year starts on the 1st of March 2017 and then it ends on the 28th of Feb 2018, meaning that this asset was purchased 2 months into the financial year, which is March, April. So basically it was purchased on the 1st of May, which is 2 months into the financial year. The fact that it was purchased 2 months into that financial year, into the 2018 financial year, it means that in 2018 we actually used this asset for 10 months. I will count for you because you guys seem not to be able to count. It is May. I'm including May because it was purchased on the 1st of May. It is May, June, that is 2 by the way, July, August, September, October, November, December, January, February. I'm including February because it's at the end of February. That is 10 months. For 2018 financial year, we did not use this for 12 months. We used it for 10 months. I counted for you since you don't want to count. We use it for 10 months in the 2018 financial year, which starts on the 1st of March 2017 up to the 28th of Feb 2018. And then they gave you the selling price. Some of you do not include the selling price in the asset disposal account. You know yourself. Please go back and check your asset disposal account. Do you have this 2,400,000? Why don't you have it? Because I've told you in the previous 4 examples that it needs to be in the asset disposal account. This truck was sold in the current financial year, on the 30th of September of the current financial year. The current financial year is 2020, which starts on the 1st of March 2018. 2019, from the 1st of March 2019 to the 28th of Feb 2020. However, guys, we sold this asset, the one that was purchased long time ago on the 1st of May 2017. We sold it this year on the 30th of September 2019. Now, meaning that we have had it from the 1st of March. I'm going to count again for you since you guys can count. March, yes, March, April, May, that is the third month, June, July, August, and September. I count September because it was sold on the 30th of September. So we used it for the whole of September because it was sold on the 30th of September. How many months is that? Show me your fingers. How many months is that? It is 7, guys. Come on now. Can't you count? It is 7 months. So in the current year, we only use this asset for 7 months. Wow, guys. Okay, I'm done with that. Alrighty, so they didn't say this asset was not recorded. So I'm going to assume that this 1,600, it is the cost price of the remaining assets. So this asset, the one that we sold, the cost price of the asset sold has already been subtracted from that 1,800. I'm done with vehicles. Let's go to equipment. We purchased the new equipment for 540. They gave us the cost price of this equipment that was purchased. And they also told us that it was purchased on credit. As much as they told us there that this asset was sold for cash. So we can have debtors control and bank. In this case, it is just a bank. Okay, now back to equipment. This equipment was purchased on credit, so the fact that we bought it on credit, it means that we're gonna have creditors control. And it was purchased from Springs Manufacturers on the 31st of August 2019. I'm gonna highlight that because it is very important. Now, it was purchased on the 31st of August 2019, which is the current financial year. Remember, the 2020 financial year starts on the 1st of March 2019. It ends on the 28th of February 2020. So we bought this equipment on the 31st of August 2019. So I'm going to count from, I'm not going to count August because it was purchased at the end of August. So I'm going to start counting from September. So we used it for the entire month of September. So we used it for September, October, November, December, January, and February. Now show me your fingers. How many of your fingers are up? It's 6 months, guys. So in the current financial year, we only used this new equipment for 6 months. And they told us that no entry was made with respect to the new equipment that was purchased, meaning that 960, guys, is the opening balance. That is the opening balance. Okay, remember I said at the beginning I wasn't sure, but I'm going to assume it's the closing unless the adjustments tell me otherwise. Adjustments have told me otherwise. They told me that the new equipment that was purchased was not recorded. So that 960 is the balance of the old equipment, meaning that it is the balance at the beginning of the financial year. Meaning that at the end of the financial year, your equipment cost balance will be 960 plus 540. Remember, guys, equipment, your assets will always be measured at cost price. So your cost price at the end of the year will be 960 plus the 540, which is the cost price of the new equipment. 960 is the cost price of the old equipment plus the cost price of the new equipment. It'll give you the cost price of all the equipment that you have. I hope that makes sense. Remember, guys, the 900 accumulated depreciation, I said accumulated depreciation balances will always be balances at the beginning of the financial year. unless you don't have adjustments. In that case, if you don't have adjustments, it means that depreciation for the current year has already been recorded, unless they gave you the depreciation amount as well and they told you that it was recorded. Otherwise, guys, accumulated depreciation amounts will always be the opening balances. Now, they said the vehicles are depreciated at 20%, 25% on diminution balance method. Remember, diminution balance method means that depreciation is calculated on the carrying value amount. Equipment is calculated at 12.5% on cost. It means that it's calculated on the cost price of the asset.